Yeah, for those that are just joining us right now, this is a panel on the Philippines ecosystem, and I guess we have been given 45 minutes to be exact to share with you guys some of our impressions, both from a founder's, but then also from an investor point of view, and maybe some fun background facts. I actually asked the organizers who the audience for this panel would be, and if we're more looking to people who are already deeply familiar with the Philippines, or if this is an audience from abroad, from across Southeast Asia, or maybe even from Europe or the States or from Australia as well, who are interested to learn more about the Philippines. So I've tried to keep it quite broad so that everybody has something that, something that's for them. And so yes, first of all, thanks very much for the Impact Summit team and Karina for inviting us, and thanks for COVID to make this happen. I'm actually quite excited because I think it's the first time that the three of us, James, Edwin, and I, have met.
Yes.
So, which is wonderful. Hopefully at some stage this will happen in person as well. And so maybe just like some facts about the Philippines. So I believe the Philippine population stands at 109 million people right now, with an average age of 25. And that is amazing. So that means we're the second largest economy in Southeast Asia in terms of population. And so massive potential. But at the same time, it's also an ecosystem that a lot of people don't really seem to fully understand. And there's over 135 million mobile phone subscribers, but the internet penetration, as both James and Edwin can attest to, remains relatively complicated, depending on where you're based. And I think what's super interesting is what a friend of mine shared with me recently, is that the Philippines was actually the birthplace of mobile money with the launch of smart money in 2001. So almost 20 years ago. And yet in 2019, only 12% of the population were actually using e-wallets. So primarily GCash, which is owned by Globe Telecom, followed by Smart Money, PayMaya, and Coins.ph, which some of our viewers might also know. But due to COVID, I think the situation changed quite a lot. So GCash really responded that apparently they had growth in amounts of transactions by 700%, which is quite amazing. So I'm wondering if this might be a watershed moment for the Philippines, where I guess like digital payments and e-commerce could lead the way when it comes to the growth of the entire startup ecosystem. I'm going to stop talking now, and I'd like to introduce my panelists very quickly, and then I'll let them start off with talking a little bit themselves. So I have, on the one hand, James Pacaba, who is the co-founder and managing partner of Morningtide Capital, who has extensive experience in financial strategy and M&A, and has invested in a portfolio of early stage businesses, ranging from fintech to construction technology and digital content. And I believe, and James can share more about this, what sets Morningtide apart is really the founder-focused approach. So it's not just the capital, but they're also helping founders navigate the journey to raising more and building their products. Our second guest, so our Filipino viewers might be familiar with him, is Edwin Lacierda, who is in the Philippines best known as a former cabinet member and spokesperson of the previous Philippine president, Benigno Aquino, but who these days goes by a humble startup title of co-founder and COO of PayMongo. It's a Philippines-based payments processing startup that managed to get into Y Combinator and also successfully raised $2.7 million in seed funding, which is the largest seed funding round that the Philippines has seen, and has gotten some funding from Peter Thiel, among others. So Edwin, maybe you can start by telling our audience a bit more about PayMongo's business and share your growth journey.
Okay. Good afternoon to everyone on the internet. So good afternoon, Johanna. Good afternoon, James. PayMongo started last year. We started in June of 2019 when we applied for. We were just identifying what kind of solution can we provide to the Philippine tech industry, and we noticed that the payments, digital payments, is something of a pain point in the Philippines. We had a lot of online sellers, but the way they go about paying their transactions online was they line up through a bank and then they pay their account and they take a screenshot of the screen, the deposit, and then send it over by text or WhatsApp to the seller. So it was a very tedious process. So we figured out, why don't we abstract all the complexities and we offer a payment platform and offer different methods of payment: credit cards, debit cards, e-wallets, and over-the-counter payments. So with that idea, we applied for Y Combinator, and Y Combinator saw some merit in our project and decided to take us in. And for 3 months, we were there, developed the product, we were able to grow, got some good training in Y Combinator. And the last day of Y Combinator is what they call a demo day, where we presented our together 200 startups our project. And so there were about over 1,000 venture capitalists who attended the demo day. And fortunately, there were a number of investors who decided to take a dive with us. So we came back to the Philippines and we started PayMongo. And we started with 20 merchants. Now we're over 12,000 merchants. And so we have, I'm sure this is one of the questions that will be asked later on, but COVID was a game changer for us because of we had the most severe lockdown in Southeast Asia. For 76 days, we were not allowed to go out. So a lot of brick and mortar stores just decided to can't do anything. So a lot of businesses also decided to survive. And one of surviving is just go online and do business online. So, but again, the foundation of any online commerce is to be paid. So we were at the right place at the right time. Unfortunate as it may be that there was a COVID pandemic, but people just decided to sign up with us since we don't charge for signups. And so a number of merchants just the online business just accelerated, and merchants just decided to go online. And we have grown for the past 3 months. We have grown our growth rates about compounded monthly growth rates about 100%. So, and we're looking forward by maybe this fall or maybe first quarter of 2020 to do our Series A fundraising. So that's where we are right now. We've very excited. A lot of work to be done yet, but we're very happy with the growth that we're doing.
Yeah, so maybe there's somebody here on the stream who sends you an email afterwards. So who knows?
I'll be glad to entertain them.
So James, how do you best describe Morningtide Capital? So what was your vision when you first started it, and what do you think sets you apart from other investors in the Philippines and the region?
Sure, thanks, Johanna. So Morningtide straddles sort of this divide between traditional business and startups and other types of early stage ventures. Our business is actually split into two major verticals. So we have a CFO and financial advisory service. Our specialization is financial modeling for decision making and valuation for medium to large size businesses in the Philippines. So these are fairly large businesses within the top, say, 5,000 corporations in the Philippines, and are usually closely held and family operated. The other side of our business is an M&A practice catering to the same clientele. But we found over the past year and a half that there is actually a desire for these types of companies to get into startup and angel investing in the Philippines. So we've come into deals with our clients in order to get into sort of verticals that are aligned with their businesses, ancillary, and some of our more aggressive clients actually invest in pretty unrelated ventures. You have basically a generation of younger CEOs that are taking over these businesses and are exposed to startups and tech news, and they're hungry to deploy their capital in the local startup ecosystem. So we're helping educate them how to do that, and we're coming in the deals alongside them to work on the corporate governance and to provide that. In terms of the vision when we started the company, it's really, we noticed that even for fairly large businesses, and never mind for startups in the Philippines, there are massive gaps in the funding landscape. It's very hard to be adequately capitalized at the start. We'll probably touch on this more later. And in the middle of the growth story of a lot of these companies, credit is very hard to come by. You have an entire generation of companies that have migrated from physical assets and are moving towards financial assets, trade assets, intellectual property, and those do not provide sort of the adequate asset base to access credit, which would ideally fuel their growth from large to very large stage businesses. So that's the challenge that we saw, and our vision is really to create a free flow of capital in the Philippines by improving the financial reporting infrastructure for these companies. It at the same time generates value because you have finance-driven decisions in terms of where to deploy capital, customer acquisition, and so on and so forth. And at the same time, it provides the foundation to be able to communicate with external stakeholders, whether these are creditors or or investors or private equity. So I think sort of this kind of corporate governance and financial reporting infrastructure is the foundation for that sort of free flow of capital. In terms of what sets us apart, I think it's really sort of the combination of our consulting experience and how we leverage those consulting resources as well as our client base. So part of the process by which we identify clients. So most of our investee companies are enterprise facing because we identify needs from within our client base. We have several industry leading clients in our which we advise regularly, and we're able to identify needs in the market, and these guys can come in as investors, early adopters for the technology. So there's a built-in client base and investor base for businesses that we find. We're also heavily involved operationally with our investee companies because we find that because investment amounts are really small at early stages in the Philippines, putting up a startup here is really unforgiving. It's very hard to recover from making mistakes in terms of hiring. That's a huge killer in terms of the startups that we've seen. Making mistakes in terms of picking your partners. It's very hard to have enough capital to pivot because your runway is so short, right? So one of the things we do is we're heavily involved in terms of forming the teams. So we usually have, we try to focus on more mature technical co-founders, and then we surround them with a diverse leadership team, that's diverse both in terms of skill set and in terms of temperament. In order to provide more fertile ground for success. We usually take over the financial advisory component. So we do the financial models, we help them monitor their cash flow and deploy their resources. So we're heavily involved at the early stages of, to make sure that the unit economics are sound, that their growth strategy makes sense, and so on and so forth. So I think that's what sort of that marriage of consulting and leveraging our client base on the consulting side for the benefit of our investee companies is a little bit different from the typical type of investor.
Mm-hmm. Okay, that's super interesting, actually. So you now touched on the point that I wanted to raise in this conversation, and that's really capital raising. So I've mentioned to both of you before that in my previous position at Endeavor, I've been more than once approached by investors from other Southeast Asian countries who are asking me about the Philippines, and were lamenting that it's very difficult to find good founders in the Philippines. And then at the same time, when you're going around the Philippine startup circles, you hear that it's essentially impossible for anybody to build a business simply because there is this absence of capital that local investors aren't really giving out to people. And so with this absence of regional investors and very few local investors, do you think there's something to this? Do you think there is something to be said about this? No good founders, or do you think like it's an investor problem? Edwin, maybe I'll start with you, what you have observed.
When we were in San Francisco, we had a chance to talk to a fintech firm, and we spoke to a global investor. And one of the reasons I asked, and I asked him, why aren't you investing in the Philippines or in Philippine talent? And the most common response they gave us was, because the Philippines is a black hole. That was the initial reaction of the investors from abroad. But and for that reason, there's really a shortage of capital. It's good that James and my understanding of Philippine statistics that we've got around 50 venture capital firms, and 40 angel investors. So it's not a lot of people who are willing to finance. And in terms of founders, what we're seeing right now in the Philippines is that a number of the big startups are primarily foreigners who've decided to come to the Philippines. For instance, we've got two big startups like First Circle and Coins.ph that you mentioned. They were all started by foreigners. But we've seen also a number of founders who are coming in who are part of the Filipino diaspora. Filipinos who, for instance, there's another YC firm who were composed of Filipino Americans who've decided to relocate themselves to the Philippines. And so we're beginning to see a lot of founders who have global exposure. I think part of the problem with our founders in the Philippines that we've got good talent, but I think the global exposure is a bit lacking in that respect. On the part of capital, for instance, there's really a desire, but people like James it's good that they're beginning to grow. It's not a very big market. In fact, one of the ambitions I have, after we do an exit with PayMongo, is to become a venture capitalist. But that's really where you know that there's a lot of talent, and then we think that the capital should be able to increase so that you can encourage more developers and more founders to really just decide to go take the startup route. A lot of our Filipinos decide to be more traditional and go to the traditional professions like being a banker, being a lawyer, being an accountant, and all these traditional steps. So, but we've now seen, for instance, on our latest statistics, we've got around 700 startups. So it's beginning to grow, and with Filipinos and foreigners coming into the Philippines and enriching the experience of the startup experience and populating the fintech, the startup landscape, together with the venture capital firms increasing, I think we'll be able to shatter the myth that the Philippines is no longer a black hole. But we're still there. There's still a lot of interest. Like you said, Johanna, we're second largest in terms of population. And in fact, when I was in government, we were described by foreign business publications as we are in a demographic sweet spot. We have a young population. We've got a growing economy. And so there's really all the potentials of growing is really there. Unfortunately, we need more capital. We need more founders who are more global in perspective that can improve our startup landscape.
Yeah, James, what has your experience been with founders? So when they come and apply for capital, what are kind of like the things that you're looking for, I guess, like in a founder? What are the things where you feel like there's definitely improvement needed?
Well, I think one of the things that's a bit unique is I don't believe that there are no good founders in the Philippines. I think there's a ton of talent here. The challenge really again is the lack of capital makes it so unforgiving to start a business here in the Philippines. Not to mention a startup that really needs to find its legs and business model over some time. There's no sort of ladderized funding rounds that you can go through. You kind of raise once and then you kind of have to get to some level of traction before anyone will look at you. And that's a challenge if you don't get your model right the first time, if you don't get your leadership team right the first time, right? So I think though the challenge here, beyond just founders, one of the things we really look at is, again, a really, really well-rounded team. One of the common shortcomings we found, because we've been investing in startups for some time, even prior to putting up the company. And technical co-founders will tend to hire people of similar temperament, similar skill set, leaving other key skill sets underrepresented in the organization, and that stunts growth. And again, with such a limited capital cushion, it's very hard to learn and sort of grow from those experiences. So one of the things that we look for a tremendous amount of domain expertise in the business. So our founders tend to be older, between 30 to 50 years old. We look for founders that are heavily networked. Philippines, in particular, enterprise sales in the Philippines is heavily based on who you know and the relationships you've built over time. Right. And then what we like to do is build around these more mature founders a more dynamic startup-like leadership team in order to sort of carry them forward, keep them innovative, and sort of push the development in terms of the solutions and the products of the company. But domain expertise, temperament, sort of a learning mindset and resilience, obviously, those are the key things that we look for.
Let me just jump in. When just this is our experience when James mentioned about the networking thing. It's really a pity that if you don't really know who you're connected to or who your network is, it really dampens the search for capital. Sometimes people need to know who are you connected to, and it's like the Chinese way of connection, the Kwanzi thing. It's very common. It's a very Asian thing. Whereas, for instance, when we were in the US, they were really looking just at the product, just at the team that James was mentioning. We were nobodies in the US, but when the venture capital firms saw what our product was, it was really based on what's your potential for growth, more than who are you connected with. And so that's, I think, one of the difficulties of doing business or looking for capital in the Philippines. It's really, I think, a hurdle in Asian economies where when connection seems to be, or networking seems to be a big factor in obtaining capitals. But those are the challenges, really.
Edwin, actually, that leads me to my next question. So I was wondering, now that you have managed to raise the seed funding from US-based investors, have you had more interest from local investors as well?
I'll tell you, and I have got plenty of stories to tell you. We approached two Taipans before our when we were in Y Combinator. We weren't there in the States for the 3 whole months. We would come back because our business venture was here. So, and on occasions that we were in the Philippines, you would get to talk to some business people. And there were 2 particular Taipan families that we approached, and because we were nobodies, they didn't know what we were doing, and they think that our idea was too hypothetical, and they didn't see the potentials of it. They just turned us down. But now the same Taipans are approaching us and they're looking at us because we've over the 1 year period, they've seen us scale up and grow in terms of growth, in terms of the growth metrics. So they're now very, very interested. But again, that's really a problem with really being nobody. I mean, there's really I don't know if this is a Western or an Asian perspective, when the Western perspective is more primarily looking into what's your product, what are your potentials, and that was what we learned also in YC. The other thing also in terms of in a founder's culture is we wanted to be as perfect as possible. But in YC, we were told just launch it. We had a product we weren't sure of, but they said just launch it. You wouldn't know the problems of your product unless you launch it. So we launched it with all the problems. That's why we had a beta launch. We had to tweak our product, but it's a kind of mentality that we learned a lot from being exposed to Western way of doing business. And while we have certain advantages also being in an Asian economy, it's really good to also be able to understand and appreciate how Westerners do also their way of looking at startups. It's more on merit-based, product-based, rather than who are you connected with. And that's where it's not, to be perfectly honest with you, since we have a track record in a year's time, it's not difficult for us to attract investments right now, investors. In fact, there's a queue of investors. And by the way, just to end with that story, however, there was one Taipan family that invested with us in our seed round. They said, I'm willing to take a risk at you because I was grilled. I was in a lunch setting, and the CEO was there, the nephew was there. I was grilled over that 1 hour, and after 1 hour period talking about PayMongo, what are we doing, and he decided to invest. But it's not a common thing to invest in a totally unknown business entity. And by the way, James mentioned that the average startup age is between 30 to 50. I'm more than 50, but my 3 co-founders are less than 30. So they took a chance with one co-founder is a graduate from MIT. The other one's a graduate of a computer school. And another one's a college dropout. So we all presented ourselves, and they took a chance with us. And so I think we thank those investors who took a chance with us. But it's really a difficult situation in the Philippines. You really have to have guts and really the boldness to just present yourself.
You have both already touched on this, but maybe I'm going to ask it, I'm going to frame it more concretely. For regional investors that might be listening to us right now, what kind of advice would you give them that would help them understand the Philippine market better and make it less of a black hole? James, maybe I can start with you.
Sure. So I think the interesting thing about Philippine markets is there's really a ton of opportunity here, but I think the challenge is that it's a little harder again to sort of get your product or your service to win just on the merits. Again, the network is important. It's super trite, but there's so much sort of corruption and preferential treatment in the purchasing process, not just for public goods and services, but even in private companies. So you have to be able to navigate that. If you can, then obviously between equally skilled navigators of that process, then the product will win on its merits. So that's one of the key things. And I've seen discomfort in terms of having to navigate that process, navigating that sales process. I think that's why we are referred to as a black hole, because that sort of opaque process leads to all sorts of expenses that shouldn't be there in the financial statements, and then the investor looks at it and then starts to wonder what's going on in this company, and it makes it difficult to invest. But there are tremendous returns to be made, because once you're able to solidify these relationships, they're very durable. You can continue to build on those relationships into a very solid business.
Edwin, how are you feeling about that? I mean, with your current investors, like, do you ever end up in a situation where you need to explain things that they really don't understand?
Oh, not for to be perfectly frank with you, not for Western investors, not for Silicon Valley investors, for the reason that correct me if I'm wrong here, James, but the way that we've seen ourselves when we present before Silicon Valley investors, that they're more concerned with the growth metrics. What's your user base? How's your growth rate? They're less focused on what's your revenue right now. I mean, we're now at the growth mode. We're not yet at the revenue mode. Admittedly, we're still growing. So we've been spending more than we've been generating revenue, but certainly our because we're expanding, so our cost is much more than our revenues. But it's Silicon Valley investors recognize that particular uniqueness. But whereas for Asian investors, and I have one right now, I'm talking to a Singaporean investor, which would grill me on what's your EBITDA, what's your all the most basic things on revenue. We're not there yet. I would be very, very frank with our friends from Singapore, and I would tell them, look, we're not there yet. If you're looking at we're generating net income, not yet. Are we generating revenues? Yes, we are. But what we're more focused is on the growth side. My thinking is that there are a number of regional investors who are beginning to take a look at the Philippine landscape, because we've seen a number of Filipino diaspora and also foreigners coming in. For instance, the first digital banking license has been approved and was obtained by people from Singapore of Ukrainian origin. The firm's name is Tonic. So they've started a digital banking license. They've obtained a digital startup. They are startup. We have two traditional banks with digital licenses, but this one is a startup that just obtained a huge investment from abroad. So, but you'll see a beginning of people becoming interested in investing in the Philippines, primarily because, like I said, we are the second biggest economy in the country, and we've got so much talent here. In fact, one of the things that we're looking also is there's a number of because of COVID pandemic, there's now remote work. So they're looking at Filipino developers, whereas before they're looking at Indian, Ukrainian. Now they're looking at Filipino developers who can do the same quality of talent, at the same time offer a cheaper rate in terms of services compared to the other countries. So we've seen a growth in that respect as well.
Okay, thank you. Just to jump in here before I'm moving on to the COVID topic, for our audience, if you have any urgent questions that you'd like us to address, please do use the chat function, and then we'll try and spend the last kind of 10 to 7 minutes to look at those questions as well. Now, James, Edwin, you both mentioned COVID, which is the new normal. So if you were to bet on the top kind of 2 or 3 industries in the Philippines that are really poised for growth now in this new normal, which ones would you pick, James?
So what do you guys, I think Edwin is in sort of the perfect industry to be in right now. Just the amount of the impetus for digital transformation in terms of cash handling and the treasury function, even in what do you call this, in large companies, it's become an absolute imperative. You know, I have 2 clients. One is they're one of the largest operators of commissaries in the Philippines, and a very traditional business. Another one of my clients is a large transport operator, and they're both now looking at cashless solutions, you know, for their businesses. And it's amazing because these are really traditional businesses. If you told me 6 months ago that they would be, you know, pushing really hard for this digital transformation, I would have just laughed at you. But now it's becoming, you know, it's becoming an imperative. So definitely there. Telemedicine is something that we've taken a bet on as well during the pandemic. Obviously, you know, there's a lot of interest in that field too. Food security is going to be an issue in the Philippines. So sort of front-facing platforms that get raw materials to households is going to be key, but it needs to be connected to sort of a really robust logistics backbone, you know, that can get vegetables from the farms to the cities. You know, that's going to be key, particularly in 6 months' time. So those are 3 things that we've taken bets on in the new normal.
Edwin, aside from financial technologies, obviously, which is going to be a clear winner.
I would defer to James, but based on what we've observed based on our data, we've seen, for instance, logistics, last mile deliveries are doing very well. The e-commerce platforms are expanding also. We just to let you know, we've met with a brick and mortar business, and they have malls. They're looking into developing their e-commerce platform, and I think they've recognized the fact that because of the pandemic, you cannot just rely on brick and mortar. So that's another, the shift towards online businesses have grown tremendously, and because we are a payments platform, we are foundational. We've seen also the growth. We've seen, for instance, a rise of restaurants doing deliveries. Even if we've opened up already, there's still a surge of online deliveries, and that's why the last mile logistics are doing very well. So, you know, based on that's what we're looking at right now. Anything that has to do with online businesses, I think they're really taking a plunge on that, and everybody's just going there. It's more of the concern that the COVID pandemic will still last quite some time until a vaccine is discovered. So there's a fear that this is an uncertainty here should prompt us to be prepared. And the only safe way, barring any disruption on the internet, is just go online.
Yeah, no, I agree. So I guess the Philippines is always described as kind of being behind Indonesia or behind other Southeast Asian countries, where I guess the major family conglomerates have really taken to new technologies. Do you think that this COVID pandemic could actually be the point where this is happening in the Philippines as well? So the conglomerates will at large scale embrace these technologies, or do you think we're not quite ready yet, or what would need to be in place for this to happen? James, I'll start with you.
Yeah, I mean, we're seeing it already. I mean, what do you call this? Again, most of our investees are focused on enterprise facing, and we're constantly being asked by the big conglomerates to provide solutions now, and I think that's a huge opportunity. There's still sort of that battle against whether they should just build it themselves or jump on somebody else's platform. But definitely, there is this democratizing effect because it's such a there's such a short time period for them now to make these digital transformations. So I think if you're talking about adoption of these technologies by the big conglomerates and our client base, which are large family-owned traditional corporations, yes, we're seeing a widespread adoption of these technologies.
Yes, I agree with James. We had a discussion with a conglomerate, which is, like I said, which is very interested in looking in investing with PayMongo. And one of the things that we've seen, for instance, our concern was user experience. And that's one thing that they're looking at. How do they make themselves be more accessible to the younger demographics in the country, where user experience is a factor in going to your business. So for instance, onboarding, we've seen, for instance, we've dealt with certain institutions which we emphasize to them that you need to improve your onboarding process. And whether it's a bank, whether it's whatever businesses that you have online, they're really, like what James said, they're really very gung-ho in adopting new technologies, because if they don't, they just die. And especially with the rise of startups. By the way, we have a very active developer community. In fact, they have a Facebook group on Facebook where they really share knowledge. That's where we also try to obtain our talents. We open our employment opportunities, put out ads on the developer startup community, and we receive a lot of responses from them. So the conglomerates are very, very aware of the need to adopt new technologies, and I think they're not that far behind. In fact, a number of them are very, very, very advanced already. So they're looking at startups as both a competitor and as well as a collaborator in bringing in disruptive technology. So it's something that we're looking forward working with conglomerates, but at the same time, perhaps competing with them.
Yeah, no, that's true. That's always a risk, right? Yeah. So if you're a startup or if you're an investor from anywhere else in Southeast Asia and you want to learn about the Philippines, like, which resources would you recommend to them to kind of like get a deep dive and better understand what's actually going on in the country, James?
I mean, to be frank, there's really no, they should get in touch with us. We actually, just to share, we actually do back office due diligence for several private equity companies in, from, I think we have one from the UK, the US, and Australia. But yeah, I think there's really no substitute for, coming here to the Philippines, participating in events. I think, TechShake, for example, has some really, really great online platforms now for these investors to participate in and get exposed to the local startup ecosystem as well. So, that's a great way to get your feet wet in the local ecosystem.
In our case, venture capital firms play a big role. They have a tight-knit community both here and abroad. They know each other, so we sometimes get referrals that we receive some calls from some venture capital firms, and we were told that they were referred to this and that. So that's one way where you can get resources, getting to know the Philippine setting. The other also is through the startups themselves, and also through, like I said, the conglomerates are very, very gung-ho in adopting technology. We've got one big conglomerate which is a venture capital firm, and they try to make sure that they're also in step with new technologies as well in the budding startup community. But our government, at least the Department of Trade and Industry, has encouraged the startup community. In fact, we have a startup law which encourages the startup community to grow, and they would sometimes fund some startups depending on if they comply with some of the requirements. But yes, we are trying to catch up with our Southeast Asian neighbors. Vietnam and Indonesia are countries that we are quite jealous of in terms of technology-wise, and so that's something we're looking at. And the firm of James would be a good example. Like you said, get in touch with James. It's one way of getting to know the Philippines.
Which brings me to my next question. So, or not mine, but actually a question from the audience. Very brief, but like, what's the best way to get in touch with either of you?
Well, I'm on LinkedIn. You can reach out to me there. We have a website, morningtidecapital.com. So you can send us an email there as well. I think those are the best ways to reach out to us.
Get a chatbot response? No, just kidding.
No, we're quite hands-on.
Okay.
Me, I'm also on LinkedIn, and we also have a website, paymongo.com. Since we have young founders, they respond to intercom, they respond to email. So we're very, very accessible. So anytime you need us, just search for us on the internet, on the website, PayMongo. Google us, we're there. So we're easily accessible by anyone who's interested with us.
Mm-hmm. There's a fintech related question here as well. Edwin, I'll start with you. So in your experience or from your observations over the past few months, how are Philippine banks responding to the waves of fintech, maybe prior to COVID, but also now, and what will need to be done to compete effectively?
Oh, they're very, very aware of the importance of technology. In fact, but the thing that one thing that we're having problem with them is really not really a problem, but because of existing Philippine laws, banking laws on bank secrecy, is the onboarding process. We also have a process of what we call know your client, KYC. We do our KYC process, electronic KYC, eKYC. So these are challenges that banks are not familiar with. In a sense, we're opening up and broadening their perspective. There's new ways of doing business in the country. And so they are looking in, that's why there's one particular bank that is looking at investing with us, because primarily they want to know how can some startups so nimble compete with a big institution. But they also I'd like to emphasize also that they've got good online products as well. Their online banking is a good way. For instance, it's a good tool for us to integrate with us. So we're really looking at their online banking payment fees, payment scheme to work with us, because they have a fantastic number of banks have a good online banking experience that we can take advantage of. But by and large, they're very, very open. We've seen a number of banks, big or small, who are very keen on working with us. Again, it depends only on the rates, but in terms of being open, yes, our banks are very, very open and are desirous of adopting new technologies to their to the institution.
James, anything to add?
I think on my end, I think Edwin captured it quite well. On my end, I get a little bit more granular. So I think even prior to the COVID crisis, there's been a lot of interest in the banking sector to adopt, fintech as part of the growth strategy of these banks. The challenge is this interest at the senior leadership team level of the banks sometimes does not trickle all the way down to middle management. Of course they have digital transformation teams where that are pushing for these sort of transformations, but then the more operational departments have trouble sort of getting on the bandwagon as well. But I think that's something now that the COVID has made this digital transformation existential. We are seeing an increase in terms of how cooperative even down to sort of this middle management level the banks are becoming. So definitely there's an increased openness.
Yeah, so I have the same impressions. So hopefully the pandemic actually has some positive side effects, and and we'll see some interesting products and partnerships coming out of this. Before, I think we have 2 minutes left, and then they're going to kick us out here. Edwin, 3 do's and don'ts for business in the Philippines. You've got 1 minute.
Be aggressive, be open, be bold in presenting your business, and don't be discouraged. It may be difficult, but don't be discouraged. Just keep on doing what you think you believe in, and at some point, people will be convinced.
Yeah, James.
I think for me, number 1, get your team right. Always have an exit hatch in terms of partnerships and hires. Be prepared to fire very quickly. In the Philippines. Number 2, make sure that you have a solid runway to sustainability for the business. Raising in the Philippines is hard to do a second time. So you need to know that you have a reasonable chance of getting to the finish line in terms of fundraising. And the third is really to be able to zoom out, make sure that there are no sort of blind spots in terms of your team's expertise. It's really going to come down to how good your team is, how cohesive you are, and how resilient you are about how difficult this is going to be.
Yeah, and hopefully by next year we'll have a vaccine and we can actually host some conferences in the Philippines and invite our international audience. Absolutely. And share some of this in the country. Yeah.
Yes.
Okay, I think we're just on time. I'm not sure what's going to happen now, if this is stopping automatically, but thanks to the both of you. Yeah, I hope we'll meet each other in person sometime in the near future. And to everybody else here, thanks for listening.
Thank you very much.
Right,
thank you. Everyone.
Bye now.
Bye-bye.